Welcome to tonight's special presentation, this week titled Golden Opportunities, Integrating Gold Equities into a Diversified Portfolio. Gold investments can enhance portfolio performance, reduce risk, and provide strategic value in today's turbulent market environment. Their low and often negative correlation with traditional asset classes can help reduce overall portfolio risk while enhancing performance. They can also provide safe haven protection from inflation and currency risk. Adding them to your investment mix can strengthen the foundation of any well-balanced portfolio. During a coaching session this week with our successful investor clients, I noted that there were many gold-related equities appearing at the top of our top VST stock list. Let me show you what I saw. In the program, I'll go to the Viewers tab and I'll select the Stock Viewer. Looking at the top 20 VST stocks, if I scroll over to the right, you can see the industry and sector information. 1, 2, 3, 4, 5, 6. 6 of the top 20 stocks are in the mining gold-silver space. And I immediately thought of a similar situation we saw back in April of this year. In fact, Angie Akers wrote an essay about it. Here's the reference for that essay and the special presentation that week that went along with it. But let's go find that essay. Back in the program, I'll go up to the views, and I can just rock the date back to April. That was the 17th because of the holiday. If I scroll down, here's the essay, All That Glitters. She begins the essay noting tariff woes and the Fed Chair Powell commentary of higher inflation and slower growth. But salient points here start with this paragraph. However, the wild ride continues. There is still money to be made in the stock market, as we discussed last week. Historically, gold has been touted as a safe haven, a hedge against catastrophic economic events, real or perceived. Therefore, it's not surprising that the price of gold hit an all-time high of $3,334.20 an ounce in early trading Wednesday. Gold stocks have been flying high. Case in point, just opened the stock viewer in VectorVest, and last night's close, 17 of the top 20 stocks were in the mining gold-silver industry. She then continued, if you're an avid VectorVest user, gold's ascension is no surprise to you as our Huey Goldbug's timing system issued a buy signal back in February on the 14th of 2025. Even if you hadn't been paying attention to the graph or just happened to miss the crossover, our education team made sure to call it to our attention on Tuesday, February 18th. We review the Goldbug's timer every week on Monday. So that's the setup. Let me share two more resources with you from our special reports section of the views. Two special reports, one titled How to Get Double and Triple Digit Profits in Gold Shares and Gold ETFs, and the amazing Midas touch. Well, of course, the when is just as important as the what. Because gold is often negatively correlated to the market and has higher volatilities, every week on Mondays we review the current status of our gold timing using our Midas Touch study. So let's do a quick review of our Midas Touch timing. Back in the program, we'll go to the Graphs tab, and we're going to graph the Huey index, the Gold Bugs index, the HUI. The Huey index tracks gold miners. Let's maximize our graph here a little bit. And I've selected the Midas Touch layout. The way the study works is we assign two moving averages to the stop price of the Huey price action, both a 10 and a 65-day moving average. On the subgraph, a 40-day moving average of RT. Signal is generated when you have a positive crossover of the moving averages, and that's confirmed by a positive crossover of the moving average on RT. So we can see that happened here on the 14th of February. That signal has continued in a positive orientation to current. I do notice also, though, that RT peaked, the moving average of RT peaked here at 1.43 in May, and has since been losing strength while price has continued to advance. Now let's overlay the actual price action on top of the study. And the study would tell us that the Goldilocks scenario here is when we just entered into trend back here in February to that peak of the moving average. And while we still have been seeing higher highs, trend still intact, that trend is weakening here with that bearish divergence. Does that mean the opportunity is over? No, not necessarily. We see the price action here, though, just kind of moved sideways from June through the end of July. And most recently, we've had another little spurt of the price advancing. One other tool of this study is if we put on the recommendation profile ribbon at the top of the graph, we can see that the buy rating came prior to the actual crossover. So we often see the buy or sell rating precede the actual crossover of the study. So here we got that early heads up on the 30th of January. So this is the Gold Bugs Index. I also like to look at GLD, which is the Spider Gold Shares ETF that tracks the spot price of gold. Here we can see it too has had a positive crossover here, brief little dip of RT below 1, and then a resumption of signal here on the 21st of January, so faster than the miners, and that's often the case because the spot price of gold is improving the profitability, the revenue stream to the gold miner. Not to mention revaluing their asset base of the gold that's in the ground. We can see, though, a little bit price differential as the price of GLD peaked on an intraday basis here on the 22nd of April. And since then, price really has moved sideways for GLD since putting in that high. With that price consolidation, RT has been falling over the same time frame, and just now barely positive at today's value, RT value of 1.02, the moving average right at 1.0. So as we're later in the cycle, what I'd look for from both of these studies is signs of reacceleration. So that's the when. Let's take a look at the what. Gold is rather unique in that, unlike other precious metals or commodities, it operates as both a commodity and as a currency. Because it is a physical asset, it has a storehouse of value aspect that makes physical gold an attractive investment. Some of the benefits that gold brings is it acts as an inflation hedge. Gold tends to retain its value when inflation erodes purchasing power of dollars. It offers diversification, as gold's low or negative correlation with stocks and bonds reduces overall portfolio volatility. And it offers crisis protection. In times of geopolitical or financial stress, gold is often a nice safe haven investment for market participants. So when we refer to gold equities, we're thinking of two main groups. Commodity or spot-based equities, those that track the spot or market price of the physical gold or gold futures, and gold exploration and mining companies. These companies involved in the mining, exploration, and production of gold offer leverage to the gold price moves. When the price of gold rises, their income rises, and they also provide exposure to operational performance, dividends, growth potential of the business, right? Other ancillary benefits that gold itself can't leverage. And of course, with any investment, there are risks. They're subject to operational risks like mine disruptions or cost overruns. Just recently, Orla Mine had a pit wall collapse. They also have geopolitical risks in mining regions, and commodity price swings can amplify gains or losses. Now, with all of that in mind, let's take a look in the VectorVest program to see where we can find candidates. We'll begin with our gold-related ETF watch list. So back in the program we go to the Viewers tab and to the watch list viewer. Under the ETFs folder, if we scroll down, we see that there is a gold and a gold ETFs watch list. We push the toolbar off to the side. So here we have gold-related ETFs. So generic guidance for ETFs is be careful of leveraged issues, but also make sure that you have average volumes sufficient to provide liquidity for the position sizes that you might take on. Scrolling over to the right, everything is in the ETF sector, but you can see the industry has a nice cross-section of offerings. The futures typically are chasing spot price, contra ETFs, inverse funds, natural resources, materials, etc. So that's one place to start. We can also use that sector industry classification to look for non-ETF related findings. In particular, at the bottom of our list here, in the market sector and in the mining sector, we have closed-end funds. We also have the gold and silver industry within the mining sector and mining other. So back in the program, if we expand our toolbar, we're still in the Viewers tab. Let's collapse the ETFs viewer. And if I scroll lower, I can come to the sector viewer. And in the mining sector, if I right-click, I can look at the industries within the sector. Here's mining gold, silver. I can right-click there and look at the stocks in the industry group. So all of these stocks are in the mining gold, silver industry. And of course, because we're looking at stocks now, they'll be sorted by default in VST order. So this top-down approach makes it very easy to focus on particular market segments. But of course, the easiest and most powerful tool to use would be the Unisarch tool. We have some gold-related searches already built into the program, and it's easy to use these or modify them to your own liking. So once again, let's take a look. Coming back out of the viewers, we'll go to the Unisarch tab, and we'll scroll down and look for searches, special searches. And there are several listed here, starting with gold bugs. This search looks for stocks in the mining gold silver industry, priced greater than 50 cents, with more than 100,000 shares of average volume. Very easy to come in and modify that value to be whatever you like. As your minimum thresholds. The power is the sort. Here we're sorting VST ascending, and our commentary says the results are sorted by VST ascending, so the stocks with the lowest VST values are at the top of the list. These are great candidates for bottom fishing gold and silver. Our next search, Gold Digger. Also has an RT ascending sort, another bottom fishing approach. Next is Gold Rush Bull. Now we're looking for a higher price and volume threshold with a RT times CI sort, looking for more established trends. Stocks ranked with the best combination of price growth persistence and short-term momentum at the top of the list. Gold Equities now starts looking for stocks that have some fundamental strength, but have also pulled back on their price action with a 5-day price delta and ascending RT sort. Good gold stocks. Looks for the stocks with the strongest combination of VST and comfort index at a low price. But of course, that price will have to be above $5 with more than 100,000 shares of average traded volume. Now, the filtering function here is looking for stocks in the mining gold silver industry group. But if you were interested instead of stocks in the industry group, those ETFs, you could in fact sort by stocks filtered by their industry group and choose some of those ETF sectors or that watch list that we had in the ETF section for gold ETFs. So quite a bit of flexibility here, and we drill in quickly to the stocks that are of most interest to you for your gold play. Along that theme, you might develop your own watch list. So here are some popular gold mining stocks that you might add to your own watch list and incorporate that watch list into your Unisarch tool. Here are some popular gold royalty companies. And of course, this is just a few suggestions to get you started. So part of this title was integrating gold equities into a diversified portfolio. So how much of these gold stocks should you own? Diversification means spreading trading risk across multiple uncorrelated positions. So how much gold should you own? Well, conventional guidance recommends 5 to 15% of a portfolio, depending on your risk tolerance. Of course, gold equities can be part of a strategic allocation for long-term diversification or a tactical allocation, just capitalizing on current market trends. So we're not financial advisors, so we suggest you get guidance from your advisor. But generally, VectorVest guidance is to equally dollar weight positions in your portfolio and hold no more than 2 to 3 stocks in any given industry or sector. So in a 10-stock portfolio, 1 or 2 positions would be a 10 to 20% portfolio allocation. But within that allocation, you can also subdivide it into smaller, undersized positions. For instance, you could trade 2 to 4 stocks if they were half the size or 1/20th of the portfolio value. So bottom line, let's not overload the portfolio in any particular industry or sector, whether that's gold or Bitcoin or tech or oil or whatever the next hot thing becomes. Gold investments can enhance portfolio performance, they can reduce risk, they provide strategic value in today's turbulent market environment. And they likely deserve a place in your investment mix. Thanks for watching.